Welcome back to the Pro Ticker Podcast. We're going to do a deep dive in some of the big stock movements happening today. Some companies are making huge gains, others, not so much.
Yeah, the market can be a bit of a roller coaster ride, can't it? Sometimes one single event can completely shift the landscape, and today is a perfect example of that.
You're thinking of Tapestry and Capri, right?
Yeah.
Tapestry, the parent company of like Coach and Kate Spade, their stock is soaring like 13.5%. But then you've got Capri, the parent company of Versace and Michael Kors, and their stock is down almost 49%.
Yeah, a judge just made a ruling that had huge implications for the whole luxury fashion industry, basically. They ruled against Tapestry's attempt to buy Capri, siding with the Federal Trade Commission on that one.
So that explains why they're going in such opposite directions.
Hmm.
Tapestry walks away with their cash. Maybe they'll set their sights on another target. And Capri's left kind of scrambling to figure out their next move.
Exactly. This whole situation really shows how a legal ruling can seriously impact a company's future. And it kind of reminds us of how important the FTC is. They're kind of like the referees of the market, making sure everyone's playing fair.
So in this case, they were worried that if Tapestry and Capri merged, it would give them way too much control over the luxury fashion market, possibly driving up prices or limiting choices for consumers.
Yeah, that seems to be what the judge thought.
Okay, so moving on from high fashion drama, let's look at what's going on with defense stocks.
Yeah.
L3 Harris Technologies, their stock is up 3.5%.
Yeah, their latest earnings report has investors pretty excited. They didn't just meet expectations, they exceeded them. On earnings and revenue, that's a top and bottom line beat. It's a pretty good sign that they're doing well.
Plus, they raised their earnings forecast for the year, which is basically them saying they're feeling confident about their future.
Yeah, exactly. But sometimes a beat isn't all it's cracked up to be. Take Colgate-Palmolive, for example.
Yeah.
Their stock actually dipped over 4%, even though they exceeded profit forecasts.
Hold on. How is that possible? They beat expectations, but their stock went down. I don't get it.
Yeah, it seems counterintuitive, but it happens. Remember, investors look at the big picture. Sure, Colgate-Palmolive exceeded profit predictions, but maybe they missed the mark on revenue growth. Or maybe their outlook for the future wasn't as optimistic as Wall Street was hoping for. Sometimes a seemingly positive report can reveal some underlying weaknesses that make investors nervous.
So even if a company looks like it's doing well on the surface, there might be deeper issues that investors are picking up on. It's all about context, right?
Yeah.
All right, what about Western Digital? Their stock surged almost 5%. So they must have had a killer quarter, yeah.
Well, they did have a solid earnings per share figure, which usually gets investors excited, but it's worth noting they missed revenue expectations slightly.
Okay, can you remind me why earnings per share is such a big deal for investors?
Well, think of it this way. Earnings per share, or EPS, it basically tells you how much profit is attributed to each share of stock. It's a key indicator of profitability, and it helps investors understand the potential return on their investment. So a strong EPS is usually a good sign, even if other metrics aren't perfect.
So in Western Digital's case, even though their revenue wasn't amazing, that strong EPS suggests they're still making a decent profit, which is probably why investors are feeling optimistic.
Yeah, that's a good way to put it. Now let's look at Digital Realty Trust. A REIT, they saw their stock jump almost 10%.
The 10% jump, that's huge. What's fueling that kind of growth?
Well, they're riding high on record-breaking lease bookings. It basically means demand for their properties is really strong.
And they also mentioned funds from operations, or FFO. Could you explain what that means for those of us who aren't REIT experts?
Sure, FFO is basically a REIT's version of cash flow. It helps investors understand how much money their properties are actually generating. It doesn't include things like depreciation, which don't directly impact their cash on hand.
So those strong lease pickings and a healthy FFO paint a pretty positive picture of how the company is doing. Makes sense why investors are happy. Now, let's talk about Coursera, the online education platform. Their shares dropped almost 10%. And this is even though they exceeded expectations for the third quarter.
Yeah, this is another one of those cases where the headline doesn't tell the whole story. Their past performance was good, but their forecast for future revenue wasn't great, which has sparked some concerns about slowing growth and potentially lower student retention rates.
So even if a company beats expectations, worries about the future can still drag their stock down. It seems like investor confidence is as much about future prospects as it is about past performance. To end on a positive note, let's talk about ResMed, a medical equipment manufacturer. Their stock went up 7%. What's their secret?
Well, sometimes success is simply about exceeding expectations across the board. ResMed had strong earnings and revenue figures, both of which surpassed analysts' predictions. That kind of performance usually leads to a stock surge.
Yeah, it shows that the company is well managed, they're operating efficiently, and they have a positive outlook for the future. So
Absolutely.
we've covered a lot of ground today. From legal battles to earnings surprises, we've seen how good news can sometimes lead to stock declines, and how exceeding expectations can drive some pretty significant gains.
It's a reminder that the stock market is complex, and it's important to understand the details behind these movements if you want to be a successful investor.
Yeah, it is fascinating to see how different industries are affected by things. Some sectors just seem to handle challenges better than others, and today's market is a good example of that.
Yeah, for sure. So what's going on in healthcare? HCA Healthcare, they're a big hospital operator, right? Their stock dropped over 8%. That seems like a lot, especially since their revenue was almost on target. 17.49 billion. Analysts expected 17.54 billion. Yeah, that's a pretty tiny miss. There might be something else going on. Their adjusted EBITDA fell short of predictions. EBITDA stands for earnings before interest, taxes, depreciation, and amortization. It's a way to measure a company's operating profitability. So maybe that's what's making investors nervous.
I see. So their revenue was close, but maybe their profitability isn't looking so good. Makes investors wonder if they're managing costs effectively, or if there are some underlying issues affecting their margins.
Exactly. Sometimes it's not just about hitting revenue targets. You got to show that you're running the business efficiently and maintaining healthy margins.
Right, makes sense. So let's switch gears to a company that's having a much better day. Booz Allen Hamilton, their stock is up 9.2%.
Wow, yeah, that's pretty impressive. They basically gave investors two pieces of good news. First, they raised their full-year earnings and revenue guidance, which basically means they're confident they're going to do even better than they initially thought.
Oh, wow. That'll definitely get investors excited. But did their actual results back that up?
Yeah, for sure. Their second quarter results were way better than analysts expected. Adjusted earnings were $1.81 per share on revenue of $3.15 billion. Analysts were only expecting earnings of $1.47 per share and revenue of $2.97 billion.
So they crushed it. No wonder their stock is up.
Hmm,
It just shows you that exceeding expectations can really make a difference.
definitely. Investors love to see that. It shows that the company has strong management, they have a solid plan, and they're executing it well.
Yeah, it's a good sign for the future. So as we've seen today, there are so many things that can affect stock prices. Legal decisions, earnings reports, even just how investors are feeling.
Exactly. The market is always changing. It's important to stay informed and understand what's driving these movements if you want to make smart investment decisions.
Yeah, it really is. Always something new happening. Gotta stay on your toes.
You got that right. That's why it's so important to really do your research. Don't just look at whether a stock went up or down. Dig a little deeper.
So what's one big takeaway that you think our listeners should remember after our deep dive today?
Well, I think the biggest thing to keep in mind, especially after seeing how a company can beat expectations and still see their stock drop, is that the market is always looking ahead. Investors are trying to predict the future. So even if a company has done well in the past, there might be concerns about their future prospects. That's why it's so important to go beyond just the headlines. You got to understand what's really driving these stock movements. Think about the company's long-term potential before you make any investment decisions.
Yeah, that's great advice. Don't just follow the hype, do your homework. Well, that wraps up our look at the market today. Thanks for joining us on this wild ride.
It's always a pleasure to break down these market moves. Hopefully our listeners found it helpful.
Okay, moving on to the next topic. Have you ever heard of social engineering?
Yeah,
Sounds kind of like something out of a spy movie, right?
it does.
But it's actually a sneaky tactic that criminals use to trick people. You know, giving up sensitive information.
It's all about manipulation and deception. Instead of like hacking into systems directly, social engineers exploit human psychology, using our trust, our fears, and even our helpfulness against us.
So it's not about brute force. It's more about playing mind games.
Exactly. And in a recent case, these tactics were used to pull off a massive cryptocurrency heist, stealing a staggering $230 million in Bitcoin from a resident in Washington, D.C.
$230 million. That's an unbelievable amount of money. How did they manage to pull that off?
Well, the perpetrators impersonated security personnel from Google and Gemini, a popular cryptocurrency exchange. They contacted the victim claiming there were security issues with his account.
So they pretended to be the good guys. They're trying to help.
Precisely. They preyed on the victim's desire to protect his assets. They even convinced him to download what he thought was security software. But it was actually malware that gave him complete control over his computer.
That's terrifying. It sounds like something straight out of a cybersecurity nightmare.
It is. It is a stark reminder that even in the digital world, our greatest vulnerability is often ourselves. We trust those we perceive as authorities, and that trust can be exploited.
So once they had access to his computer, what did they do? Did they drain his bank accounts?
They went straight for the digital gold, his Bitcoin. They transferred 4,100 Bitcoin from his account, which at the time was worth $230 million.
Wow, that's just mind-blowing. What happened next? Did they just disappear into the digital ether?
Not quite. The perpetrators, two men named Malone Lamb and Jean-Dil Serrano, embarked on an extravagant spending spree that was almost as audacious as the heist itself.
Okay, let's unpack the spending spree.
Yeah.
What did they buy with all that Bitcoin?
Well, Lamb in particular seemed to have a taste for the finer things in life. He reportedly bought 31 luxury cars.
31 cars. What kind of cars are we talking about here?
We're talking Lamborghinis, Ferraris, even a Pagani Huayra, which is a supercar that costs almost $4 million.
I guess they weren't into investing in index funds, so they're basically living the high life, flaunting their newfound wealth.
It certainly seems that way. Lamb was also known to drop $500,000 a night at nightclubs in Los Angeles.
$500,000 a night. That's more than some people make in a year. What about Serrano? Was he living large too?
Serrano was a bit more cautious, at least initially. He attempted to launder some of the stolen Bitcoin through a cryptocurrency exchange, hoping to convert it into untraceable funds.
Laundering, that sounds complicated. What does that even mean?
Think of it like this. When criminals acquire money illegally, they can't just spend it openly. They need to clean the money, make it look like it came from legitimate sources. That's what money laundering is all about.
So Serrano was trying to cover his tracks, make the stolen Bitcoin harder to trace.
Exactly. But there's a saying in cybersecurity, the human is the weakest link. And in Serrano's case, it was his own mistake that led to his downfall.
What did he do?
He made a crucial error while using a VPN, a virtual private network. It's a tool that can help mask your online activity and location, making it harder to track you. But he didn't use it correctly, and it ended up revealing his real location to investigators.
So even with all this technology, they still made a basic human error. It's a reminder that no matter how sophisticated the crime, there's always a chance that human fallibility will come into play.
That's a key insight. And it underscores the importance of digital literacy and understanding the tools we use online. Even a seemingly small mistake can have major consequences.
This whole thing is just getting crazier by the minute. But wait, there's another twist to this story, and it involves a kidnapping.
This is where things get really interesting. A Connecticut couple was driving a Lamborghini that their son had rented when they were suddenly rear-ended.
Oh no, what happened next?
They were forced into a van by masked men, threatened and tied up. It was a terrifying ordeal for the couple.
So who were these kidnappers, and what did they want?
Well, this is where the story takes an even wilder turn. The police believe that the kidnappers were after a ransom, and they demanded it be paid in Bitcoin.
Bitcoin? That seems like an odd choice for a ransom. Why not just ask for cash?
Here's where the two seemingly unrelated events, the crypto heist and the kidnapping, converge. Investigators began to suspect that the couple's son was somehow involved in the original Bitcoin theft. They believed the kidnappers were targeting the parents as a way to extort even more Bitcoin from the son.
So they thought the son had access to the stolen funds.
Right.
And by kidnapping his parents, they could pressure him into handing over the Bitcoin.
That's the theory. It seems they were trying to cut out the middleman, skipping the social engineering tactics and going straight for what they believed was a large cache of stolen cryptocurrency.
This just keeps getting more and more complicated. So did the kidnappers get what they wanted?
Their plan was incredibly risky and ultimately backfired. They panicked when they heard police sirens and ended up crashing the van, leading to their arrest.
Talk about a high-stakes gamble gone wrong. But what about the couple? Are they okay?
Thankfully, they were rescued and are physically unharmed. But this whole ordeal highlights the dangerous ripple effects of these crimes. What started as a cyber heist spiraled into a real-world kidnapping, putting innocent lives at risk.
It's a chilling reminder that the consequences of these actions extend far beyond the digital realm. But what happened to the stolen Bitcoin? Did they recover any of it?
That's a great question, and it leads us to one of the most fascinating aspects of this case. Despite recovering some of the stolen funds, Over $100 million in Bitcoin remains unaccounted for.
$100 million. That's a lot of missing Bitcoin. Where could it have gone?
That's what investigators are trying to unravel. There are a few possibilities. They could have moved it to offline wallets, known as cold storage.
Cold storage. What is that?
Imagine a safe buried in your backyard, completely disconnected from the internet. That's essentially what cold storage is for Bitcoin. It's very secure, but also risky if you lose the key.
So it's like a digital fortress.
Hmm.
But if you lose the password, it's gone forever.
Exactly. Another possibility is that they used sophisticated laundering techniques to obscure the trail of the funds, making it nearly impossible to trace.
It sounds like they had access to some serious criminal expertise to pull all of this off.
With that kind of money at stake, they probably had access to the best, or worse, depending on how you look at it. Kind of help.
This is one wild story.
Hmm.
It's got everything. Cybercrime, luxury cars, kidnapping, and millions of dollars in missing Bitcoin.
And it raises so many questions. How do we protect ourselves from these increasingly sophisticated scams? What are the long-term implications for the world of cryptocurrency?
I can't wait to dive deeper into these questions. This is definitely a story that will keep us on the edge of our seats.
It is a wild story, and it raises a lot of important questions about how we protect ourselves in this digital age.
Absolutely. I mean, hearing about this elaborate scheme makes me wonder if any of us are truly safe online.
It's a valid concern. The tactics used in this case, especially social engineering, are becoming increasingly common and sophisticated. It's like a constant cat and mouse game between criminals and security experts.
So how can we protect ourselves? Is there anything we can do to avoid falling victim to these kinds of scams?
Awareness is key. The more we understand how these scams work, the better equipped we are to spot them.
Okay, that makes sense. But where do we even start? There's so much information out there. It can feel overwhelming.
You're right. It's about focusing on the fundamentals. First and foremost, always be wary of unsolicited contact, especially if someone claims to be from a bank, tech company, or government agency.
So if I get a call or an email out of the blue saying there's a problem with my account, I should be suspicious.
Absolutely. Don't click on any links or provide any personal information until you've verified the source. It's always best to contact the company directly using a verified phone number or website.
That's a good tip. Definitely keep that in mind. What else should we be looking out for?
Pay attention to the language used. Scammers often use urgent or threatening language to pressure people into acting quickly without thinking. They might say things like, "Your account is about to be closed," or "You'll be arrested if you don't comply immediately."
So if someone is trying to rush me into making a decision, that's a red flag.
Exactly. Legitimate organizations won't pressure you into giving up sensitive information over the phone or through email.
It's like they're trying to bypass our rational thinking by triggering our fear response.
Precisely. And another thing to watch out for is requests for personal information that they should already have. For example, a bank would never ask you for your account number or your social security number over the phone because they already have that information.
That's true. It seems like common sense. But it's easy to get caught up in the moment, especially if someone is convincing.
That's why it's so important to stay calm and think critically. Don't be afraid to ask questions and verify information before taking any action. If something feels off, trust your instincts.
It sounds like being informed and aware is our best defense against these social engineering tactics.
Absolutely. Knowledge is power. The more we understand about the methods used by these criminals, the better equipped we are to protect ourselves.
Okay, so we've talked about social engineering, but what about the other side of this story? The money laundering. How did they try to hide such a massive amount of Bitcoin?
Well, one method is using a VPN, which we talked about earlier. A VPN can help mask your online activity and location, making it harder to trace your transactions. However, as we saw with Serrano, even a small mistake can reveal your true identity.
Right, he messed up his VPN settings and gave himself away. But what other techniques do they use?
Another common method is using a technique called mixing or tumbling. It involves sending your Bitcoin through a series of complex transactions, making it harder to follow the trail of funds.
So it's like shuffling a deck of cards. You're trying to obscure the original order of the cards, making it harder to track individual cards.
That's a good analogy. They're essentially trying to break the link between the stolen Bitcoin and their own identities.
But even with all these techniques, it seems like they eventually got caught. Does that mean these methods aren't foolproof?
No method is foolproof, especially as law enforcement agencies are getting better at tracing cryptocurrency transactions. They're developing new tools and techniques to follow the money trail. even when it's been deliberately obscured.
So it's like a constant arms race. The criminals are coming up with new ways to hide their tracks, and law enforcement is working to stay one step ahead.
Exactly. And that brings us to a critical point, the future of cryptocurrency itself.
Okay, now this is where it gets really interesting. What impact do these kinds of high-profile crimes have on the world of crypto?
Well, on the one hand, they fuel the perception that cryptocurrency is a haven for criminal activity, which can hinder its wider adoption as a legitimate form of currency.
Right. It reinforces the stereotype that Bitcoin is only used for illegal activities, like buying drugs on the dark web or paying ransoms.
Exactly. It creates a negative image problem for the entire industry. But on the other hand, these cases also highlight the need for better security measures and regulations.
So it's like a double-edged sword. It exposes the vulnerabilities, but it also forces the industry to address them and improve.
Precisely. As with any new technology, there are growing pains, and these high-profile crimes are serving as a wake-up call, urging the industry to evolve and mature.
So what does the future hold for cryptocurrency? Will it become more mainstream, or will it remain shrouded in this aura of suspicion?
It's hard to say for sure. The technology itself has incredible potential, but its future will likely depend on how effectively we address these security and regulatory challenges.
It sounds like it's at a crossroads. But if we can find the right balance between fostering innovation and mitigating risks, perhaps cryptocurrency can truly reach its full potential.
I agree. It's a delicate balance, but it's one that's worth pursuing. And as we navigate this complex landscape, we need to remember that education and awareness are our most powerful tools.
Okay, so we've covered a lot of ground here. We've talked about social engineering, money laundering, the potential impact on the future of cryptocurrency, and the importance of staying informed. But there's still one big question lingering in my mind.
And what's that?
What happened to that missing $100 million in Bitcoin? Will it ever be recovered? Or will it remain a digital ghost, lost forever in the vast expanse of the internet? That's the million-dollar question, isn't it? Or in this case, a $100 million question.
Yeah. It's a puzzle that investigators are still trying to piece together, and honestly, the answer might remain a mystery.
So it's possible that this Bitcoin is gone forever, like a digital treasure buried at sea.
It's certainly possible. If the perpetrators were skilled enough to move the funds to cold storage
Yeah,
and keep the access keys secret, it could be virtually impossible to recover.
I guess it's like having a bank vault with no combination.
Exactly. And even if investigators could somehow locate the cold storage, accessing it without the keys would be incredibly difficult, if not impossible.
It sounds like a perfect crime, at least from the perspective of the criminals.
Well, not quite. Remember, they were caught for the kidnapping, and they're likely facing serious charges related to the crypto heist as well. So even if they manage to hold on to the Bitcoin, they won't exactly be able to enjoy it from behind bars.
That's true. It's a reminder that crime, even in the digital world,
Yeah.
rarely pays off in the long run.
Absolutely. And even if they escape justice, the constant fear of being caught and the inability to openly enjoy their ill-gotten gains would likely take a toll.
It's like a golden cage. They might have the wealth,
Hmm.
but they're trapped by their own actions.
Precisely. But this case also raises a broader question. What happens to stolen cryptocurrency if it's never recovered?
That's an interesting question. Does it just disappear from the system?
Not exactly. The Bitcoin still exists on the blockchain, the decentralized ledger that records all transactions. But if it's inaccessible, it essentially becomes a dormant asset, like a lost shipwreck at the bottom of the ocean.
So it's still out there, but it's lost to the world, perhaps forever.
That's one way to think about it. And this case highlights the unique challenges of investigating and recovering stolen cryptocurrency. Unlike traditional assets like cash or physical goods, Bitcoin is intangible and exists only in the digital realm.
It's like chasing a ghost. You know it's out there, but you can't quite grasp it.
That's a good analogy. And this case is likely to have ripple effects throughout the cryptocurrency industry, forcing exchanges, regulators, and law enforcement agencies to rethink their approaches to security and crime prevention.
It's like a wake-up call, urging everyone to step up their game.
Exactly. And for the average person, it underscores the importance of protecting your own digital assets.
So what steps can we take to safeguard our cryptocurrency holdings?
Well, for starters, use strong, unique passwords for all your accounts and enable two-factor authentication whenever possible.
Two-factor authentication. That's where you need to enter a code from your phone in addition to your password, right?
That's right. It adds an extra layer of security, making it much harder for hackers to gain access to your accounts.
Okay, that's a good tip. What else?
Be cautious about where you store your cryptocurrency. Consider using a hardware wallet, which is a physical device that stores your private keys offline.
So it's like a digital safe that you can keep in your home.
Exactly. It's much more secure than storing your keys on a computer or a smartphone, which are more vulnerable to hacking.
That makes sense. Any other advice?
Be wary of phishing scams and social engineering tactics. Don't click on suspicious links, and never give out your private keys or passwords to anyone.
So if someone claiming to be from a cryptocurrency exchange contacts me asking for my information, I should just hang up.
Absolutely. Legitimate organizations will never ask for your private keys or passwords over the phone or via email.
Okay, these are all really helpful tips. It sounds like knowledge and vigilance are our best defenses in this evolving digital landscape.
You got it. The more informed we are, the better prepared we'll be to navigate the exciting but sometimes treacherous world of cryptocurrency.
Okay, let's move on to the next topic. Retailers seem to be facing a pretty challenging holiday season this year.
Oh, yeah, definitely. A lot of factors are sort of coming together, making it really hard to predict what's going to happen, both for the retailers themselves and shoppers.
Yeah, it's true. The economy is a bit shaky right now, too.
Right.
So, like, first off, we've got the election coming up, and it's close.
Uh-huh.
I feel like close elections always make people a little hesitant to spend, right?
I think so, yeah. Makes sense. Like when things are uncertain politically, it can affect how confident people feel about the economy, too. Like maybe they'll hold back on big purchases till they see what happens,
Yeah.
after the election and all.
Yeah, I can see that.
Yeah.
And then on top of the whole election thing,
Mm-hmm.
there's that weird calendar thing this year.
Oh, right. Yeah.
Fewer shopping days between Thanksgiving and Christmas.
Yeah.
So, like, doesn't that just make things even more intense for retailers?
It totally does. It's like 5 fewer days.
5. Wow.
Yeah.
Okay, that is a big deal.
It's like they have less time to hit their sales goals now, so each day becomes even more crucial.
Yeah. Well, you know what I find really interesting?
What's that?
We're seeing some, like, mixed signals from shoppers.
Oh, interesting.
Like spending was up in September, but then consumer confidence dipped in the middle of October. So, like, what do you make of that?
That is interesting. It's like, maybe people were spending in September because they were worried about prices going up even more.
Right.
Or maybe they just wanted to get a head start on holiday shopping. Who knows? But then as we got closer to October, maybe all the election stuff started to make people nervous. Or maybe just prices in general. And so their confidence went down, even though they'd already spent some money.
So it's like they're spending, but they're not feeling great about it.
Exactly. Yeah. And this actually kind of leads into another trend we're seeing. Like a lot of Americans are worried about money this holiday season, expecting to feel some financial strain.
Oh, yeah, I've heard that from friends and family, too. It's like everyone's feeling the pinch.
It is, yeah. Actually, like 62% of Americans, according to a recent survey, expect to be feeling that strain.
62%? Wow.
So they're going to be looking for deals, like really hunting for those bargains.
Yeah, for sure. So,
Yeah.
like, with all these challenges, what are retailers actually doing? It seems like they're having to get creative to navigate this.
Oh, absolutely. They're definitely pulling out all the stops. And, we're seeing a few different strategies. Some retailers are focusing on like maximizing those shopping days, while others are like really honing in on how to appeal to budget-conscious shoppers.
Okay, yeah, I'd love to hear some examples. Like, what are some specific companies doing?
Well, let's take Academy Sports and Outdoors.
Okay.
They're not wasting any time. They're starting their sales early in November, trying to really squeeze the most out of every single shopping day.
Makes sense. Get ahead of the game.
Exactly.
Yeah.
And they're not just doing sales, they're also putting a big emphasis on like value. Like they're offering buy now, pay later options, so people can spread out those bigger purchases.
That's smart. Makes it more manageable.
Yeah, exactly. So they're really targeting that shopper who's being really practical with their money this year.
Okay, so Academy is all about, like, maximizing time and giving people flexibility. What about other companies? What are they doing?
Well, you've got companies like Skechers, they're focusing on new products.
Ah, okay.
Kind of like banking on those innovations to catch people's attention, even if they're not as willing to spend.
I see. Like trying to tempt people with those shiny new things, even when they're watching their wallets.
Exactly. It's like they're saying, hey, look at this awesome new stuff you didn't even know you needed.
That's a good way to put it. So what kind of stuff are they coming out with?
Well, they've got these like collaborations with Kind of unexpected brands, like they've got a John Deere line of footwear.
John Deere shoes. Wow, I did not know that was a thing.
Right, and they've also got those slip-in shoes that are hands-free, the ones that are getting a lot of buzz.
Oh, yeah. I've seen those online. Interesting. So you've got some companies focusing on practicality and value and others pushing the boundaries with new products. What other strategies are we seeing out there?
Well, then you've got the more, like, classic holiday players, like Macy's, for example.
Uh-huh.
They're leaning into the whole spirit of the season.
Yeah.
They're doing a lot of curated gift sets and festive apparel.
Right, right. Tapping into that holiday magic.
Exactly. It's a time when people are looking for those perfect gifts or maybe just wanting to add a little cheer to their own wardrobe.
I can see that. But are they doing any deals or promotions? Or are they holding back this year?
Well, actually, they're keeping their promotions at a pretty similar level to past years, but instead of having like a few big promotions, they're spreading them out across more products.
Oh, I see. So it's like creating that sense of value across the board,
Yeah,
making sure there's something for everyone at a good price.
exactly. It's a way to keep shoppers engaged and excited without having to resort to like drastic discounts on everything.
Makes sense. Okay, so we've got companies trying all kinds of things. Early sales, focus on value, new products, and then that good old holiday spirit.
Yeah.
Sounds like they're trying to appeal to every kind of shopper out there.
They are, yeah. And they have to be adaptable because consumer behavior is kind of all over the place this year, especially with all these other things going on.
Yeah, for sure. Now, let's talk about Lululemon for a second.
Okay.
They're expecting a hit to their revenue this holiday season, and they're saying it's because of the shorter shopping season.
Oh, wow.
Yeah, it's pretty bold of them to come right out and say that, isn't it?
It is, yeah. They're expecting like a 3% drop.
3%? That's not insignificant.
It's not, and it just shows you how much of an impact those 5 fewer shopping days can have, especially for a company that really relies on holiday sales.
Yeah, but I'm sure they're not just, like, giving up.
Right. Oh, definitely not. They're being really strategic about it. Like they're releasing new products more frequently, coming out with new colors and styles, and they're trying to get those new products on the shelves faster.
So it's like they're making up for the lost time by giving shoppers even more reasons to come in and see what's new.
Exactly. It's a way to stay ahead of the curve and keep things exciting.
Makes sense. Now, here's something I've been wondering about. What if retailers start using these external factors, like the election or the shorter season, as a way to explain away poor performance? Kind of like a scapegoat.
Yeah.
It seems like it'd be easy to just blame everything on the economy.
Oh, absolutely. It's definitely tempting to just point fingers at outside forces when things aren't going well.
Yeah. Like, oh, it's not our fault, it's the economy.
Exactly. But I think smart investors and analysts will see through that. They'll be looking for signs of deeper issues, things that might be masked by those external factors.
Right. So if a company's always blaming outside forces, it could be a sign that they're not dealing with some internal problems.
Exactly. It's important to be able to tell the difference between the real impact of those external forces and just attempts to hide internal weaknesses.
Okay. Yeah, I see what you mean. So, like, as we head into this crazy holiday season, what advice would you give shoppers? How can they navigate all of this without feeling totally overwhelmed or stressed out?
It's a great question. Well, first of all, they need to be prepared for a really competitive market.
Yeah, it sounds kind of like a retail battle royale out there.
It might feel that way at times, but that actually means there are going to be a lot of good deals for shoppers.
Okay, good point. So it's a good time to be a smart shopper.
It is. But don't just buy stuff because it's labeled a doorbuster.
Right.
Do your research, know what you're looking for, compare prices, and most importantly, set a budget. That'll help you avoid overspending.
Yeah, good advice. Sounds like a mix of good planning and being mindful about your spending.
Exactly. And remember, the holidays aren't all about buying stuff. It's about spending time with people you care about and appreciating that spirit of giving.
Yeah, well said. It's easy to forget that when you're bombarded with all those holiday ads.
It is. And lastly, don't be afraid to think outside the box with gifts. Think about experiences, personalized gifts, or even donating to charity in someone's name.
Those are all great ideas. It's those thoughtful gestures that people really remember.
Exactly. The best gifts come from the heart, not just from a store shelf.
I love that. Okay, so we've talked about the challenges retailers are facing, the different strategies they're using, and even some tips for shoppers. But here's something I'm thinking about. Do you think this holiday season could actually lead to some positive changes in the retail industry?
Hmm. That's a really interesting question.
Like maybe it could force them to be more innovative in ways they wouldn't have been otherwise?
I think you might be right. Like, often when things get tough, that's when people come up with the best ideas. So maybe this challenging environment could push retailers to, like, totally rethink their strategies and really try to keep up with what shoppers want.
Yeah, so it's like a pressure cooker for creativity and resilience.
Exactly. Like, the retailers who do well this holiday season will be the ones who can adapt quickly and really understand what their customers want.
It's like survival of the fittest in the retail world.
Yeah, kind of. But it's not just about surviving, it's about thriving, using this challenging time to get better and create a retail industry that's more focused on the customer and more sustainable in the long run.
I like that. It's like a phoenix rising from the ashes of this turbulent season.
That's a great analogy. And it's not just about the retailers, it's about shoppers too.
Oh, that's interesting. What do you mean?
Well, maybe the season could make shoppers think more carefully about how they spend their money, like be more conscious about their choices.
Yeah, like maybe they'll start asking themselves, do I really need this? Or could I find a more sustainable option?
Exactly. It's about moving away from just buying whatever and thinking more about what you're actually getting.
So it's like a wake-up call for both retailers and shoppers.
Yeah, I think so. It's about realizing that we can't keep doing things the same way and that we have the power to create a better, more sustainable future for retail.
That's a really hopeful thought.
It is. It's about recognizing that even when things are uncertain, we can choose to make positive changes.
Yeah, it really makes you think about the bigger picture, doesn't it?
It does. Talking about all these changes and challenges, I wonder, do you think this holiday season could actually accelerate some of the trends we've already been seeing in retail?
That's a really good point. And I think you're right. Like, take discount stores, for instance.
Okay.
They've been getting more and more popular lately, right?
Uh-huh.
But I think with the economy the way it is and the shorter holiday season, that trend is probably going to, like, explode. So even more people hitting up those bargain bins looking for deals.
Totally. It's going to be like a treasure hunt out there.
Yeah, that's a great way to put it. And that puts a lot of pressure on those traditional retailers, right?
Oh, yeah, for sure. They're going to have to figure out how to compete on price without, like, losing what makes their brand special.
It's a tough balance.
It is.
Yeah.
They can't just slash prices
Right.
and become a discount store overnight. They have
Yeah.
to find that sweet spot,
Right.
offer good deals, but still keep that quality and experience that people expect from them.
Yeah, it's a tricky situation for sure. Now, going back to something you mentioned before about retailers kind of blaming everything on the economy, like pleading the macro.
Right.
You really think some companies might try to use that as an excuse for their own problems?
It's possible. But like I said, anyone who's paying attention will see through that.
So what should people be looking for? Like, what are the signs that a company might be struggling, even if they're blaming everything on outside factors?
Well, look at the numbers. Are they losing market share? Are they losing customers? Are they struggling to keep up with, what people want these days?
So if a company's always complaining about the economy, it could be a sign that they have some internal stuff they need to work on.
Yeah, exactly. It's important to be able to separate the real effects of the economy from companies just trying to hide their own problem.
Oh, okay, that makes sense. Now, let's shift gears a little. We've talked a lot about the challenges and strategies from the retailer's point of view. What about the shoppers? Any advice for them as they head into this crazy holiday season? How can they make the most of it and maybe even, like, enjoy it?
Yeah, for sure. I think the biggest thing is to be ready for a lot of competition.
Okay.
There are going to be a ton of sales and promotions, so take your time, do some comparison shopping, and don't feel like you have to jump on the first deal you see.
So patience is key this year.
Definitely. Like, don't let those doorbuster signs make you buy stuff you don't actually need. Make a list, set a budget, and stick to it.
So it's all about planning and being mindful.
Exactly. And remember, the holidays aren't about spending a ton of money.
Mm-hmm.
It's about connecting with people, making memories, and being generous. Don't let the shopping stress take away from that.
Good point.
Yeah.
It's easy to get caught up in all of that.
It is. And one last thing. Don't be afraid to get creative with your gifts. Think beyond the typical stuff you find in stores. Think about experiences, personalized gifts, or even donating to charity on someone's behalf.
I like that. It's about those thoughtful gestures that really mean something.
Exactly. Those are the gifts that people remember.
Okay, so we've talked about the challenges, the strategies, and some advice for shoppers. But now I'm wondering, could this whole holiday season actually be a good thing for the retail industry? Like, could it lead to some positive changes, maybe force them to be more innovative and sustainable?
I think it could. When times are tough, it can force people to come up with new solutions. So maybe this could be the push that retailers need to really step up their game.
So like a moment where they have to figure out how to do things better.
Exactly. The retailers who are willing to adapt and change will be the ones who succeed.
It's almost like a rebirth for the industry.
I like that. And it's not just about the retailers, it's about shoppers, too.
What do you mean?
Well, maybe this season will make people think more carefully about their shopping habits. Be more conscious of what they're buying and why.
Like a shift towards more mindful spending.
Exactly. It's about realizing that we have a choice in how we spend our money and that our choices have an impact.
That's a really powerful idea. It's like a collective realization that we need to do things differently.
I think so. And it's about understanding that even in uncertain times, we have the power to create positive change.
That's a really hopeful message.
Yeah, it really is. And the choices we make now as retailers and shoppers will have an impact for years to come.
It really is like we're shaping the future of retail with every purchase, isn't it?
I think so, yeah. It makes me wonder how we'll look back on this holiday season a few years from now.
Right. Will we remember it as like total chaos or as a turning point?
I'm hoping for a turning point. Like maybe this is the season where people start being more thoughtful about their shopping, you know, more conscious of their spending,
Hmm.
prioritizing value and experience over just buying a ton of stuff.
So like a move away from impulse buying and toward more intentional spending.
Exactly. And maybe for retailers, it'll push them to try new things like more personalization, localized assortments, really understanding what each customer wants.
So it could be like a forced evolution for the industry, one that ends up benefiting everyone.
I think so. It's like adapt or die out there. And the ones who adapt are the ones who'll do well in the long run.
Makes sense. So this holiday season is more than just about sales. It's about shaping the future of retail and creating a better experience for both businesses and shoppers.
Absolutely.
Well, I think we've covered a lot today, explored the challenges, the opportunities, all the potential changes coming this holiday season. Any last words of wisdom for our listeners as they navigate this crazy landscape?
I just say approach it with an open mind. See what retailers are trying, pay attention to the trends, and think about your own shopping habits. This season really reflects the bigger changes happening in retail and our society.
That's a great point. So stay informed, be mindful, and don't forget to enjoy a little bit of that holiday spirit.
Exactly.
Okay, let's move on to the next topic. Have you been keeping an eye on gold lately? It's been having quite a moment, hitting a 7-week streak of gains. That's the longest winning streak since August 2020.
Yeah, it's pretty fascinating. This surge isn't just a random blip either. We're seeing consistent upward movement. Gold futures have climbed in 11 of the past 13 weeks, recently hitting $2,740.90 an ounce. That's just a whisker away from an all-time high.
Wow, that's incredible. So what's fueling this gold rush?
Well, gold is often considered a safe haven asset. When things feel shaky economically or politically, people tend to flock to gold because it's seen as a stable store of value.
Ah, so it's like that old saying, when in doubt, buy gold.
Exactly. And right now, with the U.S. presidential election just around the corner, there's definitely a sense of uncertainty in the air. Add to that the potential impact of new tariffs being discussed. And it's no surprise that investors are feeling a bit jittery.
So they're turning to gold to weather the potential storm.
Precisely. And it's interesting because this rush to gold could actually be creating a sort of paradox. Some analysts are suggesting that these record high prices might be causing what's called demand destruction.
Demand destruction.
Yeah.
Now that sounds a little counterintuitive. What does that even mean?
It's actually pretty straightforward. As the price of gold climbs higher and higher, it starts to price some buyers out of the market. It's classic supply and demand. If the price gets too high, people will start to look for alternatives or simply decide to wait it out.
So even though there's all this uncertainty pushing people towards gold, the price itself could start acting as a brake.
That's exactly the dynamic at play, and it's something to watch closely. But gold isn't the only precious metal feeling the heat. Silver is also on the rise, with front-month silver futures ending the week up 1.73% at 33.603 cents an ounce.
Oh, that's right. I'd almost forgotten about silver. But a 1.73% gain.
Yeah.
It's nothing to sneeze at.
Absolutely. And this really underscores that the same forces driving gold higher are also at play in the silver market. Both metals are benefiting from those underlying market anxieties.
So it's like a ripple effect. The uncertainty boosts gold. And silver's riding that same wave.
You got it. It all ties back to that sense of unease about what the future holds.
Makes sense. Now, we've been talking a lot about the global economic picture. But what about the U.S. economy specifically? Does that factor into gold's trajectory?
It definitely does, and here's where things get really interesting. Good news for the U.S. economy might actually be bad news for gold.
Wait, really? That seems counterintuitive. Why would a strong U.S. economy hurt gold?
Well, think about it this way. When the U.S. economy appears strong and stable, investors feel less need to seek safety in gold. They're more likely to put their money into assets that are perceived as riskier, but potentially more profitable, like stocks or real estate.
Ah, so if the economy's looking good, investors are more comfortable taking on a bit more risk. They don't feel the need to cling to that safe haven of gold.
Precisely. And we have some important U.S. economic data coming out soon, so those releases could definitely influence which direction gold heads next. If those reports suggest a robust economy, we might see gold prices cool off a bit.
So it's a real balancing act. On the one hand, we have global uncertainty pushing gold up. But on the other hand, a strong U.S. economy could pull it back down.
Exactly. And to add another layer to this, we can't forget about other commodities like copper. The copper market isn't quite as enthusiastic as the gold market right now.
Interesting. So while gold's basking in the spotlight,
Mhm.
copper's telling a different story. What's going on there?
Well, even with positive signs from China's economy, experts are predicting less growth in copper prices than initially anticipated. It seems the copper market is taking a more cautious stance.
Hmm. I guess different commodities react differently to global events.
Absolutely. And on top of that, copper production in Africa, specifically in the Democratic Republic of Congo,
Mhm.
is experiencing a major boom.
So we've got gold soaring, silver on the rise, copper playing it cool, and African copper production surging. It's like a commodities roller coaster.
It really highlights the interconnected nature of the global commodities market and how diverse factors can influence price movements.
It really is fascinating to see how all these pieces of the puzzle fit together. So let's bring it back down to earth for a moment. What does all of this mean for the average person? Should we be rushing out to buy gold bars?
Well, I can't give specific financial advice, but I can say that understanding these market trends can help you make more informed decisions, whether you're an investor or just trying to understand the financial world around you.
Yeah, fair enough. But let's imagine for a second that things start to calm down globally. Let's say the election passes without too much drama, and the economic outlook brightens. What happens to gold then? Does it lose its shine?
That's a great question. Remember, gold doesn't generate income like a dividend-paying stock or a rental property. Its value is largely tied to investor sentiment and its perceived role as a safe haven during times of uncertainty. When those risks diminish, investors often shift their focus away from safe havens like gold and towards assets with higher growth potential.
So it's like when the storm clouds clear, people are less interested in that sturdy umbrella, and they're ready to go out and play again. They're looking for investments that might grow faster in a sunnier economic climate.
That's a great analogy. They might shift to stocks, real estate, or even cryptocurrencies, depending on their risk tolerance and investment strategy.
So while gold can be a valuable part of a diversified portfolio,
Yeah.
especially during uncertain times, it's not a magic bullet. It's all about understanding when it makes sense for your individual circumstances.
Exactly. It's crucial to consider your own financial goals, risk tolerance, and time horizon before making any investment decisions. Remember, what works for one person might not be the best fit for another.
Now, earlier you mentioned front-month silver futures. For those of us who aren't trading pros, can you break down what that actually means?
Of course, front month futures refer to contracts for the nearest delivery date of a commodity. So in this case, it means contracts for the delivery of silver in the very near future. They are often the most actively traded and provide a real-time snapshot of current market sentiment.
So by watching these front-month futures, we can get a sense of how traders are feeling right now and what they're betting on for the immediate future.
Exactly. It's a powerful tool for understanding market dynamics.
Now, as we wrap up our deep dive into the world of gold and precious metals, what's the one key takeaway you want our listeners to walk away with today?
I'd say the biggest takeaway is that market movements, particularly in commodities like gold, are rarely driven by a single factor. It's almost always a complex web of interconnected forces. You've got geopolitical events, economic indicators, investor psychology, and even things like weather patterns or unexpected discoveries, impacting supply and demand.
Right. It's not just about the price tag. There's a whole story unfolding behind the scenes. And understanding that story can make us all savvier. Regardless of whether we're active investors or simply curious about the world around us, it's like a window into how things work.
Precisely. The more you understand these interconnected forces, the more sense you can make of the economic landscape. and potentially even make more informed decisions in your own life.
It's amazing how a single commodity like gold can act as a barometer for so much that's happening in the world.
It really is a fascinating microcosm of global economics and investor sentiment.
I feel like we've unearthed a treasure trove of insights today. I know I'm going to be looking at gold and the news in a whole new light from now on.
That's what we hope for. It's all about making those connections and sparking curiosity. And hey, maybe you'll even impress your friends with your newfound knowledge at your next dinner party.
Now you're talking. I'll be dropping all sorts of gold nuggets into the conversation.
Well, in that case, I'll leave you with one final thought to ponder. We've talked about how rising gold prices can signal uncertainty. But have you ever considered that if gold prices keep climbing indefinitely, it could actually end up hurting the economy in the long run?
Hmm. That's a really interesting question. I'll have to mull that one over. It seems like every force has an equal and opposite reaction, even in the world of finance.
Exactly. It's all about finding that balance.
All right, that brings us to the end of this episode. Thanks for joining us.